Hello again and welcome to the Shed of Shillings. I'm Rich Causon and today I want to talk to you about what kind of information might my credit broker need to get a credit approval. Today I'm going to talk about two key areas. The first one's the most important, which is, can I prove that I can afford to repay this loan? The second area is, if I can't afford to repay the loan, how does the finance company get their money back? When I'm taking out a loan for thousands or even millions of pounds, a funder will be keen to ensure that you've put some thought into the process and understand the risks to your business. Not all businesses need a business plan full of cash flows and projections, but to demonstrate why their new venture is foolproof, as a new start business or where you're expanding the business rapidly is going to need one. A well thought out business plan tells the lender that you've thought about all the risks and the pros and the cons of your new venture. Most established businesses will have at least one set of accounts, maybe more, showing previous trading performance. Lenders like to see your turnover growing, profits going up, cash flow coming into the business each year, and your business becoming more positive. Lenders also like to see management accounts or even draft accounts, which give them an idea post year end what's going on in your business, so don't be surprised if they ask for those as well. Whilst accounts are good and give us a snapshot in the past, bank statements can tell us what was going on last month, last week, or even yesterday in the business. So 1, 2, 3 months worth of bank statements, along with them knowing what your overdraft limit is, will help a finance company to make a great decision about your next loan. Is this a replacement or an additional monthly commitment to your business? Is a question that can often turn a maybe or a no into a yes when a funder looks at a proposal. If you can prove you're already paying £500 a month and an agreement's coming to an end, then why would they not lend you £500 a month going forwards if they know you can already afford it? If you're taking out an additional loan and you're not replacing previous lending, then ensure that you've got a strong rationale for where that extra cash is going to come from within the business. If I can't afford to repay my loan, how does the finance company get their money back? Finance is rarely a something for nothing situation, even when it's called unsecured. By security, I mean you have to offer something of worth in return to the finance company for them giving you a loan. This can be an asset, property, invoices, or simply a personal guarantee. By assets, I mean plant, machinery, equipment, etc. If your loan is a refinance or a loan against equipment, the finance company is going to want to know things like the make, the model, the age, the supplier of the assets. A valuation is often done on these kind of proposals without you even knowing. Once the lender knows what the value of the asset is, they can make a decision as to whether they're going to lose money if they have to repossess this asset or not. Same as for assets, where a property is involved, the bank or the lender is ever so likely to want to get your valuation done by a professional person. That's often done by charging you a valuation fee from the lender, or you making getting the valuation done yourself and paying for it. I'm mostly talking about invoice discounting and factoring here. You'll need to supply the finance company with a list of your current customers and how long they've been outstanding. The easiest way to do that is an aged debtor and creditor listing. You can sometimes factor just a single customer or single invoice, so be aware that that can be done. If you're hiring out vehicles or assets, often a finance company will want to take a charge or a license to sublet over your rental agreements. If your business fails, this means that they can step into the agreement and collect rentals to pay off the loan. This is a security item that can sit behind all the other forms of security. A personal guarantee can either be a specific charge over your home or some other property, or it can be what we call a shortfall guarantee, where there is no specific charge over your home or property. Both of these have their pros and cons when it comes to the crunch day if the finance company has to call in their loan. Talk to your broker and they can advise what types of guarantees are likely to be needed and what the pros and cons are for your particular situation. Most lenders will want to ensure that a personal guarantee is supported by some form of worth as a homeowner. and you're likely to they're likely to check that you've got some personal equity. To do this, you're likely to need to fill out a personal assets and liability statement, so don't be surprised if you're asked to fill one out. Finally, your broker is going to need to provide proof of ID, proof of address, and a data processing consent form. As part of the proposal, they're going to hold your data on a computer, and then they're going to need to identify you, so don't be surprised if you're asked for those. I'm sure this list's not exhaustive, but it's going to give you a good idea of the basic items that a broker's going to need to get your credit approved. I hope this has been helpful. I've been Rich Causon from Causon Business Finance in the Shed of Shillings. I look forward to hearing from you and seeing your proposal shortly.